There are two ways to make money in the stock market. First way is growth stocks. So, for example, this would be investing in Tesla in 2014 because you believe correctly that the electric car industry is going to grow. The second way is the discount value investing strategy where you buy undervalued stocks, and this is the Warren Buffett method, so to speak. Now, there's a lot of ways to evaluate if a stock is overpriced or not. Warren Buffett famously said to a group of MBA students that they could be successful as him if they were willing to read 500 pages of filings per company to get an understanding of the financial position. But there's actually a better, more simple way to do this analysis that I'm going to share with you today. Your time is valuable, so here's exactly what we're going to do in this video today. We're going to look at Apple, and then we're going to look at Nvidia and have a clear-cut analysis as to if these stocks are overvalued or not. And please remember, this is not financial advice, but I will say that everything I'm going to show you today is backed by real data, or actually is real data. However, you'll have to take that data and use your own judgment when making investment decisions. I can't tell you whether or not to invest in something. So for the purposes of our analysis, we'll be using MegaCharts software today. MegaCharts is a powerful tool to analyze stock valuations because it allows you to zoom out and see the bigger picture and trends, so to speak. It's also not that expensive of a tool, and they let you try it out for free. So if you like what you see, make sure to use the coupon code in my bio or in my video description, whatever, because you'll get 10% off. Now, the crazy thing is, I think I can show you with just one chart that Apple is overpriced right now. We'll do a deeper analysis later, but just check this out. This is a chart of Apple's revenue, gross profit, and operating income on a quarterly basis. I can actually zoom out and go all the way back to the beginning of Apple's history, but let's just stick to the modern era post 2012. We can see really clearly that all of the metrics have steadily increased since 2012, except for kind of a slight flattening in the past 2 years since 2022. But for the most part, Apple's been doing better and better with respect to their fundamentals. But here's where the magic happens. So let's click stock price overlay to see how the stock price is correlated with these numbers. And holy shit, in my opinion, it is obvious from this one graph alone that Apple is way, way overpriced right now. In those earlier years, 2018, 2017, Apple's stock price is well below the caps of the revenue, but today it's actually well above. What this is showing me is that the fundamentals don't match up with the actual price you have to pay for Apple stock today. If you look at operating income alone, you see the same trend. Then look at revenue alone, you see the same trend as well, just in more simplified and clear terms. Let's take a deeper look at the actual Apple product lines today. So if you look at this graph for services revenue, Apple's doing better and better with its services revenue. I think services revenue for Apple represents things like Apple Care and other subscriptions. But Mac sales are down if you look at the graph. If you look at the graph for iPhones, iPhone sales are down from 2022 to 2023. iPad sales are down. Even wearables, so like Apple Watch, all of their product lines are experiencing decreasing sales. So in my opinion, the data is really clear. Unless Apple stock goes way, way down, there's, in my opinion, no case for buying the stock right now. So let's go to Nvidia. And a lot of people are saying Nvidia is too high. It's too late to invest in Nvidia. The AI boom, it's already, impacted for the AI boom, etc. We'll look at the same graph, revenue, operating income, and gross profit. With the stock price overlay, when we click that, you can see that Nvidia seems to be much more in line with its historical fundamentals from a brief glance. Now, Nvidia's price is around $100 higher than the latest prices on this graph because Q1 2024 reports haven't come out yet, but I still think it's a good buy based on this data. If you look at just the operating income, Nvidia actually seems to be undervalued based on how it was trading before the AI boom of 2023. Net income with stock overlay is the same thing. And EBITDA, if you go down to EBITDA with stock overlay, also shows the same trend. Ultimately, you have Nvidia, same company as it was in 2022, same CEO, same team for the most part, and it's trading arguably at a discount when you compare these fundamental metrics to the stock price. So I think people who say it's too late to make money with Nvidia are probably wrong. Anyways, that's just a high-level overview of how you can use data to make better investment decisions, to decide if stocks if overvalued or they're fairly priced at any given moment. It is inherently risky to invest money. And again, I'm not giving you financial advice, but it's also risky to not invest your money because you're just going to lose your money to inflation. If you like this video, please leave a comment, like the video, and subscribe to my account. And I'll be sure to put out more comments on how to be a data-driven investor. Thanks for watching.